to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have about your subscription. Where are the opportunities in the market? For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. My background is artificial intelligence. I have a master's degree in computer science, specializing in statistics, artificial intelligence. My background is coding. Now we have a team of financial engineers that are building new models and enhancing new algorithms for latest advances in artificial intelligence. So very proud of that team and experience. I'm not and started managing my own money more than 25 years ago. All right. Disclosures are very important. Trading stock and options involve risk and not suitable for everyone. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal performance. So disclosures are important. If you're new to trading stock or options, I encourage you to visit optionstraining.com to understand the risk associated with trading stock or options. All right, so let's take a look at the market. We have basically the earnings season has started, right? Looking at the Tradespoon, let's look at the model. So model is still showing a downward momentum in the market short term. So basically saying that on the upside, we can potentially retest all-time high. So let's look at that. So retesting all-time high 480, and on the downside, the immediate support is 472, which is yesterday's session low. So yesterday's session low and all-time high is the short-term prediction for the market. And if you zoom out using the model, and you can analyze any stocks or ETFs, same approach. Instead of 10 days, let's look at 6 months, longer-term prediction. Basically saying that potentially we could break through the all-time high 480 for the months of January, and as high as 488, maybe even 490. Most of the macroeconomic data is behind us, right? The next major data point, I think, would be the Fed decision, which is end of January, right? Last Wednesday of the year. Of the January. On the downside, 446. So right now, maybe 10, 12 points to the upside, 30 points to the downside. And model turned neutral, long-term model, right? When you look at the long-term predictions, it basically says there was enough damage done in, August, September, and October, where from being extremely bullish trend, model did turn basically saying right now, we're neutral, and this is the range we're trading. And obviously, the closer we get to 488, the less room there is to the upside. And you can kind of see it in the price action of the market, right? It's kind of not going anywhere. So I would personally not chase the market and look for these pullbacks to accumulate, right? Look for pullbacks to accumulate if you're bullish, right? If you're bearish, then you use these opportunities maybe to become a little bit more bearish. We did have CPI data this week and PPI data, right? And you can see 10-year yield dropped significantly. Yesterday it rallied after the hotter than expected CPI. Then it reversed down and continued and on PPI data, which came in a little bit softer than expected, it actually retracing back, and you can see in 10-year yield is struggling to break through 200-day moving average, which is, at least for now, is bullish for the market, right? Yield goes down, QQQ goes up, dollar also started trading in the range. It started pullback, but it's trading in the range. So those are the main events, right? So CPI, PPI data, that's behind us, and now we have earnings season. Mixed bag, right? JP Morgan, a little bit better than expected. We do have a kind of a reversal going on. It was up as much as 2 to 3%, now reversing back. UNH also down 4%. We have Delta Airline down 8%, pretty sharp pullback in Delta Airline. And actually Bank of America is down, Wells Fargo is down, Citigroup also reversing from sharp rally to a pullback. So you can see a mixed bag in terms of earnings. I think BlackRock Group was positive. Let's see where it is now. Okay, it's slightly negative now. Okay, so for now, I would say healthcare is in downward reaction. I've seen CVS kind of pulling back 3%. Also not a good price action. And one of the main winners is NVIDIA, right? In NVIDIA, you do have a strong breakout above 500 level, which it's been consolidating since August. So bulls really like these type of price action. And again, NVIDIA would be one example where if you consolidate for a long time and you break out, that would be a good opportunity. So these are the type of stocks that I do think it makes sense if you're long the market to be long. I think CCJ today was instability in Middle East and energy rallying. You have breakout in CCJ, right? It's been consolidating for a few months around 46, and now you have a breakout, right? So those are the type of price patterns you are looking for. If you see a stock is struggling to break out, like let's look at maybe Merck, right? It's kind of not breaking out to the upside, then I would not chase the stock. I would wait for this breakout as a signal. Because you can see major indexes are struggling for the most part, but there are a few examples like Microsoft, right? Kind of have a small breakout. Not sure out of the significant side of it. I think only NVIDIA is able to break out, right? Google tried to break out, but then again struggling to make through all-time high. So then you would wait. And on the reverse example, stocks like Apple, that broke through the 50-day moving average, staying for a few weeks below 50-day moving average. That's in 200-day moving average. I would stay away, right? I would stay away from these stocks. And some people say, buy on these pullbacks, or Tesla, right? Buy on these pullbacks. My opinion is, probably not, right? You don't want to buy weak stocks in the market that you're not sure which direction it's going, and earnings seasons just started. So what to expect short term, right? So yields are going lower, dollar is going lower, which is bullish for the market. The question is the market, right? Market is at all-time high. Spiders is at all-time high, within few points, and QQQ actually already broke through all-time high, right? No, marginally broke. So QQQ marginally broke through all-time high, still undecisively, and spiders are in the same boat. And IWM is struggling. It broke through multi-year high, right? So you have to go through April of 22 to see same level in IWM, and now it's trading lower. So you have winners, obviously, you have losers in this setup, and then the question is, where the market is going next. Why is this important? Again, to decide on the how much to allocate per trade. So risk management is very important, right? It's clearly not your regular bull market where all boats are lifted and all stocks kind of go in the same direction. You clearly see Tesla is going lower and Apple is going lower and Nvidia and Microsoft going high, right? And Wells Fargo, Citigroup pulling back, JP Morgan is going higher. So determining position size is extremely important because it's still a trader's market. This is not a good, buy and hold type of market. Because if you just buy and hold and you did it, you started trading in 2020, like middle of 2021, depending what you were trading, you're flat, in the past 2 to 3 years. Best case scenario, and obviously with volatility, if you don't have stop levels, and you may be down, right? I mean, on average, right? Obviously, I have friends that said, "Oh, I made 100% return last year because they were buying Magnificent Seven stocks." And I asked them, "What did you do in 22?" And they were probably down, significant amount of money. So that's kind of the idea. So having position size is extremely important, right? Because buy and hold, probably didn't really work that well based on the indexes that you can see. So one scenario we do break out, right? Earnings season just started for now. There are more losers than winners, right? You see Wells Fargo is down, Bank of America is down, kind of reversing, right? From significant rally, sitting on the main support, Bank of America, Wells Fargo, sitting on the main support, right? July breakout. Delta Airline is pulling back. UNH is pulling back. So, but it's just one day, right? We'll probably know more by end of next week, right? As more and more stocks will announce earnings. So looking at the spiders, I mean, there are 3 scenarios. One is we're trading in this range, right? A lot of bulls basically saying that the July breakout, right, before the pullback we had in August and September, the breakout was 460, right? This is a failed breakout, then we traded lower, and now we're significantly higher. So January, February, as we're going through the earnings, and one day we have more winners than losers, market trades in the range, right? One scenario, the most popular scenario, I would say, is scenario number 1, a breakout, right? We continue going higher. For the next 2-3 weeks, we break above 480 and we stay above 480. So that's scenario number 1. Scenario number 2, banks, you do see a rise in the defaults, maybe not in JP Morgan, which is good, but Wells Fargo, Bank of America, they do report that their capital allocation to bad loans are rising, right? They are rising because there are defaults on credit cards, defaults, small businesses defaulting on some of their loans. So you do have kind of winners and losers in terms of banks, and probably regional banks going to have even more issues. So then we trade in the range, right? We trade in the range between 480 and 460. We've been doing that since for the past 1, 2, 3, 4, 5, right? For the past 5 weeks, I guess we could be trading in this range for the next 5 to 6 weeks. And scenario number 3, earnings are not as good as everybody anticipates, right? Most bulls anticipate upper single-digit revenue growth. If we don't have upper single-digit revenue growth, right, then you have scenario 3. Plus, right now, bulls, the assumption is that Fed will lower interest rates in March. If they don't lower interest rate in March, that's also a risk, right? Right now, market anticipates 5 to 6 interest rate cuts, and most people say, well, no, that's too aggressive. So probably not going to lower interest rates in March, maybe in summer. Instead of 5, 6, it will be 2 or 3. So those are the three scenarios that I can see in the market. Very important to kind of decide which scenario you're going to trade, right? If it's 2, you do market neutral. If you say 1, then you have more bullish positions. If you say 3, you have more bearish positions. And then helps you to determine position size. So I encourage you to do this exercise every time you trade. In the live trading room, we do this on a daily basis, and that, you know, I encourage you to consider. All right. Good morning, Joseph. Robert, welcome. Thank you for participating. All right, so let's go through this exercise. 1, if you are bullish on the market and you think market is going to take out the 480, not just for a couple hours, but you know, for a couple of weeks, right? Decisive break above 480. 2, you think for the next few weeks or months and a half, it's going to trade in sideways between 480 and 460. And 3, we're going to break below 460. So let's go through that exercise. Done. 2. Okay. Anyone else? Peter, 3. Mark, 2, 2, 3. Nobody won? Usually there's a few ones. All right. So thank you, Andre, Joseph, Mark. So most people said either 2 or 3. I mean, we used to have more ones. Not sure what changed in the past week. Well, maybe CPI data harder than expected. Maybe that, or maybe earnings so far are a little bit underwhelming. Okay. I'll give a little bit more time for people to decide. Okay, so all right, so still most people said 2 or 3. I also in the 3 campaign, right? I mean, interest rates are down and dollar is down, so that is true. So the question is, you know, is it a soft landing, or are we going to see signs of at least earnings recession, right? Maybe GDP is still growing at 2 to 2.5%, but forward-looking statements from banks indicating that the revenue is going lower and they're not growing in single, you know, double single or upper single digits. So that would be my opinion. I think there are 2 variables, right? One is one is Fed going to lower interest rates, which I don't think is going to happen in March, and I don't think we're going to have. The only way we would have 5 or 6 interest rate cuts if there are some liquidity issues, right, or some instability in the market. Then you will have 5 to 6 rate cuts or cuts. So the fact that most people do believe that we do have 5 to 6 rate cuts based on the future, basically indicating that these people are probably betting not on, you know, immaculate disinflation, but on the fact that we will have some kind of a recession. And earnings, you know, I do think that earnings are not going to be upper single digits. We're actually going to see deceleration of earnings in Q4 and then in Q1. So a lot of ifs and assumptions, you know, but for now, you kind of, you know, as long as the market, for those of you who said 2, as long as we're trading in this range, it's kind of, I would be market neutral, right? Because one day we're going to be up 2%, one day we're going to be down 2%. You know, for now I would just wait, right? If you see for the next couple of weeks we're above 480, well, I would start closing my hedges and maybe adding to bullish positions. And you know, if we do drop 460, I would add to bearish position and close bullish positions, right? And until then, you're just kind of observing, right? I mean, the idea is the most popular saying in the past 2 years: trade what you see, not what you think, right? You can be a bull, you could be a bear, but you know, if you see something, if you see market trades sideways or losing momentum to the upside, well, you just market neutral. So that would be my proposal. Obviously, there is always geopolitical risk. Election in Taiwan, Middle East, Red Sea, supply chain issues and transportation costs in Red Sea due to Middle East war. So all of these are obviously unknowns, and they can escalate or de-escalate on a daily basis. You do see crude oil, right? You see Bitcoin reversing, right? I would watch Bitcoin. It was the approval of the spot ETFs, the assumption that Bitcoin is going to 65,000, right? Most people believe it's going to 65,000. It did try to break out through this consolidation, right? For 6 weeks, we're kind of not going anywhere. And actually, on the above average volume, we got close to 50,000, and now we're reversing, right? That's kind of been the up and down price action. So I would watch NVIDIA personally 40,000, right? If NVIDIA drops, usually it's a good indication for forward, usually Bitcoin and small caps are leading the market. If Bitcoin breaks out above 50,000, goes 52,000, then I think market also is gonna follow, and vice versa. If Bitcoin drops below 40,000, it's a proxy for risk taking, then the market is gonna reverse. And I would watch IWM, right? One of the reasons I'm bearish is that, it's a false breakout, right? We did have, we'll see we're gonna close, but it looks like either neutral or slightly green candlestick, right, for this week. So 3 weeks in a row, we have a red candlestick, and we're briefly trading below this uptrend line in IWM, right? We pierced through it yesterday. We had a big reversal to 197, and now we're trading again below this uptrend line from November. So if IWM breaks below this level 190, right, or actually I would say now it's 191, close enough, right? Yesterday's low. So if we do break below yesterday's low after this failed reversal, I think that will increase the probability that spiders will drop below 460. So for me, forward-looking charts that I do pay attention to are small caps and Bitcoin, right? High yield is also important. I would look at HYG, right? So it's kind of a straight line. So we broke below that in January. We did rebound back. So the question is, if we jump above 78, okay, then I think rally can continue. But if we drop below 76.5, I think you will have a reversal in the market. So those are some of the important charts that it makes sense to pay attention to. I do see a lot of price action in silver, right? You have a big rally rebound in silver back to 200-day moving average because the yield is dropping, right? It's sensitive to the yield, and yield looks like it's reversing back down, right? So that's bullish for price metals and precious metals. So you see XME today is up because the interest rates are dropping. It looks like it is reversing a lot of its gains, but we'll see. What else? KRE, right? Regional banks continue to go lower. I would also pay attention, right? It closed the gap, and I would look at the August breakout. So same thing. So a lot of these asset classes are sitting kind of an important, they had a breakout, 2-year breakout, 1-year breakout, and now they're reversing down and sitting on these supports. So I would pay attention to that. KRE is important. and then cyclicals in terms of XLI, right? XLI also broke above August high, all-time high, right? And now it's trading below that. I mean, it's reversing down and sitting on this support, right? This is all-time high for industrials, and now we're back to the support line. So it's important to kind of see if this support line will not hold. All right, any questions? Into Yemen. Right, there's escalation in the Middle East. Obviously, US and Britain are, targeting the, what do you call it, launch pads of Houthi rebels, where they attack the ships in the Red Sea. So the US and Britain start targeting these infrastructure, and we'll see. Obviously, that's escalation, right? So we're going to assume that Houthi and maybe even Iran might retaliate. We'll see. All right, we will see. Okay, so what do we do on Tradespoon? So we do have different subscription. I kind of briefly went through Stock Forecast Toolbox, right? You have these 10-day prediction, 1 hour prediction, you have 6 months prediction. So I use this on daily basis. It helps me to determine if the market is overbought or oversold, or stock is overbought or oversold, right? So if I see we're struggling with 480 and we're close to predicted high, I mean, does it mean it's going to drop to 446? No, but I know that the market is overbought, and any negative news, potentially it could reverse down. If we drop to 446, it's the other way around. Any good news and the market is going to rise. So very important information. Plus, it gives me a sense of direction. Right. Right now, model is neutral. So unless something changes in the dynamic of the market, bulls and bears, it's a stalemate. Right. It's a stalemate between bulls and bears. What I usually trade in live trading, when we have active trader, weekly trader, and monthly trader. So these are the models that basically show you short-term or long-term which stocks are in uptrend, right? Actually, it was interesting that CRM was mentioned yesterday. Somebody mentioned there was an upgrade CRM, and do I buy CRM? And we discussed CRM. I did say that, listen, it looks like it's a clean breakout, right? We broke through above 266. Day 1, day 2, we're staying above 266. Okay, I mean, next level is 300, and probably if it drops below 265, you want to be out, right, or 260. So you have maybe 10 points to the downside, 30 points to the upside. That's a good setup. I like this setup. It makes sense, and the model actually, I said that yesterday, and interestingly enough, model picked up this move in CRM. Right, same thing with Amazon. Model picked up Amazon. Right, so these are short-term predictions, basically saying that these stocks are in uptrend. They broke through some kind of a support or overhead resistance, and there is more room to the upside. So some of these stocks I trade during live trading room. Right, sometimes, usually I look for, depending on duration. Right, if I hold this position for a couple hours, couple days, I look for 0.5% to 1% gain. If I hold it for 1 or 2 weeks, okay, I look for 2% gain, 2% stop loss. So on active trader, the suggestion, since it's a short-term model, it basically says look for 1% gain or loss, right? You buy it to 62.80, you sell it to 65, or you buy it to 71, sell it at 274. And you use dollar cost average, split your position into 2, right? So same thing in the live trading room. I encourage you to always think about position size. In live trading room, I always say on a $10,000 account, you shouldn't risk more than $250, right? And you split the trade into 2, so $100, $125. On a $10,000 account, you don't want to risk more than 1% of your account value on short-term trades. So that would be a setup. when you have active trader, weekly trader, monthly trader, you can also use options, right? A lot of people prefer options. Okay, you can use your weekly options if you have them on CRM, and instead of buying it at 272 to 71.40, you buy 260 call at $11.40, right? The idea is to buy deep in the money options, so your delta is highly correlated to the move of the underlying stock price, right? And same idea, you look for 1% move up or down using stock prices, right? Using stock prices. That's a very common question. People ask me, well, if I trade options, to me, it's the options are derivative of the stock. So if you're looking for 1% move in stock, you using stock trade, you're still looking for 1% move in stock. If you trade in options, so in this case, obviously, for 1% on $260 stock is $2.60. So the option will move 30% and stock will move 1%, right? But you can't really expect, if the model expects the stock to move 1%, you can't really expect, if you're using options to make, instead of $2.60, make $5, right? Plus there's a delta, right? Sometimes these options delta 70, delta 80, so they move even less. So it's something to consider. So these are the active trader stock or options. And same thing, you have weekly trader, monthly trader that you can use. So these are the tools, right? We have picks with suggested entry exit prices. And this is geared for someone who has a trading plan. If you have a trading plan and you know what to do, then most of our subscribers are really excited about these tools, right? If you don't have a trading plan, if you don't know how to manage the trades, if you're new, you probably not, these are the tools, right? You're probably not going to be very successful. If you don't have solid trading plan, you haven't done it long enough, and you are not confident trader. For those, I would encourage you to consider joining Elite Service, because you have an opportunity to participate in a live trading room. You have morning bell and closing bell, which you can participate live. I know some people have better things to do than watch me trade. Then there are recordings. But I think, if you're new to trading or you're not confident in your trading plan, then I would propose to watch the recordings or participate live. If you don't do that, you're just using the tools, the probability of success is small, right? It's just like skiing. If I give you ski poles and goggles and tell you go to Colorado and ski, and a lot of people do that, right? They do that and they learn how to ski. They fall, hopefully they're not going to break their legs, but they fall many, many times. That's what, and then they still can be successful, but it takes time. You're not going to do it in one season. You're probably not going to do it in 2 to 3 seasons. It's going to take you longer. If you get a coach who helps you, guide you through the learning of how to ski, it's going to be a much faster process, much more enjoyable. Well, but coach, costs money. I understand that, but that would be the analogy, right? Try not to learn how to ski by going to Colorado and just putting on best ski poles and ski goggles and think you're gonna master black or blue diamond mountains. So that's an analogy, right? So morning bell, closing bell recording, that would be your guidelines, that would be your coach, right? I mean, we have one-on-one coaching also, but this is kind of intermediary step. So I do encourage you to participate in this live trading room, watch the recordings, and you do have a trader log, right? Every day there are trades, right? I do options like Delta Airline, right? This trade, went against me. So do you have an example of iron condor puts calls, right? Sometimes I trade stock like silver or LA Lilly, right? I start buying silver and LA Lilly because I do see a potential breakout on these stocks. So you have a combination of both option trade and stock trade. Some of them are short-term trades, some of them are long-term trades. So for that reason, it's important to participate in live trading because if you just look at these orders, you don't really know what my position size is. You don't know what my duration is. In live trading room, I will explain it, right? I will tell you exactly what my thought process is, what should, based on account value, what should be the position size, or at least what I propose to be the position size. So those nuances are extremely important. So that's elite service, and you can enter phone number, right, and receive SMS messages, right? You can register your SMS alerts. We have now both phone number or Discord where you can participate. So that's elite circle. That's elite circle. We also have robo investor where I only trade stocks. You can get SMS messages and you can see orders for stocks. This is more of a longer term holding. And we do have option only. So spreads, premium services, spread. These are I'm trading option spreads only for those of you who like to trade options. And then shadow trader is, the shadow trading is where you can see all of my orders. So those are some of the services that we offer at Tradespoon. Any questions? And meanwhile, let's see. Meanwhile, 10-year yield continues to pull back. So it looks like we're going to finish red candlestick. Maybe undo most of the gains from first week of January. QQQ is, again, basically recovered all the losses from last week and gained some. And Spider, same thing, right? So recovered all the losses from the first week and continued to trade higher. IWM looks like it's going to be a neutral candlestick. So underperforming, Arc Innovation underperforming. Looks like gold miners are finding support. Silver is finding support this week. Germany, Europe, neutral price action. So same as last week. So Germany and Europe are underperforming. China has been, kind of almost retesting October lows, on its way to retest October lows. Bitcoin looks like reversal, right? Looks like we're going to close same level as last week. Okay. Any questions? So some of the other stocks to think about, General Electric, right? That's been on the radar. I mean, a lot of the stocks are going to have earnings, right? So you have to be careful, right, with earnings. So most of these stocks, if they're overbought, you probably want to wait for the earnings, right? Unless you believe in a company like Nvidia, they're, even if it's down, you're fine. But if technical trading, you want to kind of wait for some of these earnings because you can see, you can have mixed results, right? And you can have more pressure to the downside on some of these stocks. All right, any questions? All right, so we talked about subs. So let me just see. Okay, so we went over the services, different portfolios, YouTube channel. So every Wednesday we have a live trading room, morning and closing bell. What else? And that's about it. All right, any other questions? So my thoughts on silver actually went long today, right? If you can see it in the elite circle, start adding to silver. Because it looks like at least all the uncertainty about interest rates for the next 3 weeks, right? The Fed is going to announce their decision or future guidance, I think January 30th, right? So we have 3 weeks. And it looks like based on CPI and PPI data, right, at least right now, the path of least resistance is for the interest rates continue to go lower. We actually undid all the gains from last week. So, I mean, you could wait for confirmation, but it looks like silver and gold is oversold and it is bouncing back. So at least, for the past 5 weeks, it's not going lower, right? It rebounded, dropped, so it's staying at this level. Can it drop to 20 or 19? I mean, it's possible because, next week, based on earnings, we might have a reversal. But I think the path of least resistance is to go higher, right? And using dollar cost average. Right, if it drops to 20, you don't want to be down $250. You want to be down on $10,000 account. You want to be down only 100. And I think the path of least resistance is for the theme for this year is that interest rates are going to continue going lower, right? No matter what, whether it's a soft landing or soft recession, it's going lower. Granted, that was the theme of last year and didn't really work out towards the end of the year because inflation did tick up. But it looks like, based on all the data, macroeconomic data, this should not reoccur this year. It doesn't mean it will not, but it should not. So I still think that interest rates are going lower, and this is good for at least for gold and silver, this is good, right? Lower interest rates should be good. And for economy in general, it should be good. It's just the question is, why are they going down so fast, right? Are they going down because, just disinflationary pressures, or are they going down because there's some stress in the system, some liquidity issues because of the tight money supply that we've had in the past 2 years? And that's a debate that's ongoing. And obviously, based on the earnings from banks today, more people inclined to pull back on banks because of these liquidity concerns. All right. Any questions? Thank you, Joseph. Any other questions? Andre, Ken, Andre, BJ, Clark, D, Ed, Cecile, Joseph, Kevin, Mark, Michael, Patrick, Peter, Raul, T, Michael. Thank you very much. Have a great day, and I hope to see you in live trading room. We do have a live trading room today, closing bell, and otherwise Monday is off. So enjoy the day off, Martin Luther Day King, and we'll see you on Tuesday. Thank you.